Taxes, everyone's favorite topic. All right, actually, I'm gonna help you get more money and put it in your pocket. This is Garrett Gunderson, New York Times best-selling author, and I'm here to talk about tax cuts. I mean, we heard about the Trump plan, and that it was gonna be this major thing. There was gonna be pass-through deductions, and that the business owners that had corporations were gonna be down to a 15% tax rate. The reality is, so many of those things didn't come out. And sure, we used to be at 39.6% on the top tax bracket. We went down to 37.5%. But ultimately, I think this is going to generate more tax revenue. Now, all that being said, here's how to navigate it. So you got to learn about 199A. 199A is one of the major changes in this plan. Now, 199 meant that you can go back 3 years, and if you had R&D credits or domestic production credits, which are simply if you had a software business or you modified software to support your business, or you had to do a bunch of research in order to create a product, and that ended up creating a profit, these are things you can go back previous years and get that money back into your life. So that's the good news. The bad news is you can't do that moving forward with the new plan, so it eliminated some of that in the 199A. Important to know over everything is that there's hope regardless of what the plans are. There's three main buckets to pay attention to. First bucket is you build the tax team. You want to be proactive with them, meet with them every quarter, and you want to brainstorm. What are the best tax strategies? What do all these tax changes mean for me and my business? Can I write this off or that off? And just ask any question. It's brainstorming. And they tell you yes or no, and you only act on the ones that they say yes. Then every 3 years, look back. And if you go back, you might find that you can amend the returns, and I talked about that with 199 and going back with R&D or DPAT. Second category is deductions. You want to ask the question, how does this relate to my business? And then number two, you want to document it. And even if the first answer is, I don't know if you can write it off, you might have to set up the right corporation in order to write it off. Like if you have a, can I write this off as a uniform? The answer might be no, unless you have a production company. All right, third category is reclassification. This is the game changer. You want to take active income and make it more passive. The type of corporation you choose and how you pay yourself makes a huge difference in the taxes you pay. And if you take distributions rather than salary for some of your income, that might save you 15.3%. And then the most important thing to learn about is tax arbitrage. That place where you spend $1 and you get more than $1 back. I want you to make more than what you spend if you're trying to save tax. As a matter of fact, think fundamentals and economics first, tax savings second, produce first, because the greatest tax shelter in the world is to earn another $1. And you don't want to pay the ignorance tax where you're tipping the government unnecessarily because you don't have the team, you're not maximizing your deductions, or you don't know about reclassification because you either chose the wrong corporation, you paid yourself improperly, you didn't know about these great strategies that are out there. Now I've planted the seeds. I'll bring you a lot more in the future.